Good morning, all. I'm going to try to be very quick about this and show us what is important. This is Euro USD. I'm pretty much going to dwell much here on Euro USD. So looking at Euro USD, we are familiar with this structure that I call the A correction and the B and the C correction. So this is monthly time frame. And looking at the extension that I gave those times, I said, like, if you pay attention to this green line, that's the origin of A, to this green here, it is the origin of, let me just switch to the weekly time frame for you to see. Okay, so this is the weekly time frame, so you can see the origin of A is from top here. This is the origin of A from here. You can see that's the origin of A. Then the end of A. Then this end of A marks the origin of B to the end of B in blue here. Should I make it? Let me make it also that green color. So that's the origin of B, and this is the end of B, which is the origin of C, to what we say is the end of C. So we can say right on that analysis, we are seeing reaction, that really on the end of C, that is where we are seeing that reaction for now. Now, what are we going to witness? Is it going to be a reversal? There are two things we are going to experience around this level. Market or price is not that perfect. So price may project a little bit beyond here before that reversal. So it's not perfect, but we should be expecting if it's going to be a reversal or it's going to be a correction. So the kind of reactions that we're going to see here will tell us if it's going to be a reversal. And if it's going to be a reversal, of course, what do we expect? We expect that the trend line created between 1 and 2 will be broken, completely broken, and which is not in place. That is, this trend line between 1 and 2, you expect it, I will label it, this trend line will be broken to the upside. So before you say yes, that has changed completely. I mean, so we are in a new trend, but it's going to take a while. Seeing the way this thing is going to go, it's going to take a while. We can label this. Let me use this color, or let me use this color for it. So we can label this A. Label this A. We can label it A. A. So for A to be broken, or let me use black for it. Let me use black for it. For A to be broken, yeah. Now, that will mark the change of the old trend. Now, but wave 3 to be broken is one thing that you have to look at. The wave 3, of course, starts from the end of 2. So, and if you take that one down to 3-2 from here, right from here. So we have need to pay attention to all these. This is the whole of 3. This is 3 down. And that is B. That's another trend line that has to go for it. That is B. That is B. So that is the trend line that will go for it. We will see how that also will go for it. Okay. But the immediate thing that has to give way is with 5. Now, if you are counting this wave, this is 1, 2, and the entirety of this one to up to this point is the inside of what? Of wave 3, 2, 4. Because we said this is 3 of 3 and this is 4 of 3, and that we have finished 5 here. And this is a big 4, which is a big rally. And we are seeing this one as the end of 5. Now, one thing that is also we can see that is apparent, it's the way this wave came down. The way this wave came down, it came down rather sharp. It came rather sharp, too sharp for me to make it a wave 5. But we're going to see. So, is this the end of 3, 4, the end of wave 3, or is this place the end of wave 3? So those are the things that we are going to see. Regardless of the fact that, we think we are done with this extension here, and that it has touched with, regardless of that. So what we are going to see in the immediate is how this new rally here, we start from here, is going to be violated. And that is where our attention has shifted to now. So we are shifted to this new rally here, and how it's going to be violated is our immediate concern, and that will be a C. You take it trend line for trend line, a C. So this is trend line C. We need to see how this trend line C is going to be. Where do I put it? Let me put it somewhere here. Yeah. How this trend line C is going to be violated. Now we're going to go in more inside, because looking at these and the way this one came down rather impulsive, it came rather too sharp for me to say it's an ending diagonal on the higher time frame. So, but whatever it is, we'll still treat this as, because it's a beginning of another rally to me. That's the thing. It's a beginning of another rally to me, which marks that after this one went up, now to complete this correction, we completed a correction here. So what we are telling ourselves now is that, are we done with wave 4? And is what we are seeing now wave 5, or the internal structure of 3? That is what we are seeing now. But to answer that question, one of the things we can do is to look at this rally itself and say, if this one is 1 and this one is 2, so what extension do we have here? Because we can't say wave 3. It might be that wave 3 is not completed. So if we do this, all these are assumptions anyway. All these are assumptions anyway. So looking at this, and wave 3 also can even extend to 4.23. It can extend to 4.23, which is not marked here. Which of course can go a bit down. So all these are still possible for wave 3 anyway. So, but we are going to be dealing with this rally to know when this rally is going to end. This particular rally is going to end. So that is what we want to do for now. So if we go to the daily time frame, so we are much after this new rally here. Forget what is happening here. So we need to overcome this one first and see what exactly is happening here. So let me draw it better. This is on the daily. I want to get it. I will still leave my labels. All those ones will still be intact because we have to look at the way this structure is coming down to tell if it's an ending structure of the old structure or that we're still going to have a big wave down. So if we're going to have a big wave down, it might mean just we're just ending 5 here. And so we are going to have an extension and that nullifies that as a correction. But let's see what we're going to follow what is going to happen here. So the structure will tell us what will happen and what to expect. So there is a beginning of a new rally and the time is at 5-1 and 5-2 here. So let's go inside for our structure. Okay. So going inside for our structure, so we can draw a more precise okay. So this one is much better. You can see the edges are touching where I like it perfect as it could be or as it could get. So this is C that we have to deal with first. Now, so we are dealing with this. Now, this is a new structure for us that we have to do. So we adapt structure by structure. So the extent to which this new structure will be taken will tell us what we are doing. But again, we must see that, okay, oh, a new structure has unfolded. Where is the end of this new structure? And to know where the end of new structure is going to be, for it to be that we are finished wave 3 of this new structure, because you can think that wave 3 is ended here or ended somewhere here, and you are seeing wave 5. Before we can assume all of that, we must know that at least wave 3 or 5, if it's 5 that we are correcting, has to do at least 1.6. So, and to assume that, we're going to come from, which is the beginning of 1 here, to the end of 1 here, which marks the beginning of wave 2 to the upside, and to the end of wave 2 in the golden yellow. So 1.6 is right here. The trade barely touched 1.6. So, and something tells me that this would most likely still touch 1.6. So if I may take this one down a bit, I may take this one down to that 1.6 level. So which means that as far as I'm concerned, it looks though as if we are just finishing with 5 of 3. Mark you, this 5 of 3 later, by the time we are finishing the O wave, and the kind of reaction we get above this one will tell us if it's 3-5 that we are finishing, or it's 5 of 3 indeed that we are finishing. So just know that this is a beginning of a new structure itself, which we must see the end of it. And as it is now, it means that we are not done with correcting 4 of this wave. And you know, in the correction of this wave also, if we say, oh, the 3 has ended here, see the kind of correction. We are going to go inside here to really understand something I want us to see. Now, this is C that we have to have overcome. But in the immediate times to know that, okay, we are done with this new wave 3 completely, and we want to correct 4, we must deal with this section first. It's section by section. Mark you to say that you are done. I'm going to show you something. To say that we are done with this, we have to overcome this. For instance, let me use blue, which is the immediate thing. And that was done with. You can see the trend has changed. That was done with. Now, for us to know that we have done with wave 2, we must overcome that wave 2, which begins from here and here. So we have to join all these ones. So there is a break out of it, which means that that wave 2 has ended. That is how to deal with structure, regardless of what we are, if I'm reading it right or not. Now, to say that this wave 3 has ended, we must overcome the immediate structure of wave 3, and that is how we have to now join this to this. These two edges must join. It is important that immediate correction and this has to join themselves, and this looks perfect for me. And we are going to take it down as far as we can go. So it means that we must overcome this. So that is how to interpret and use your trend line. If you still remember the way I was bringing it down from the upper to the higher time frame to say you can't see B and C again. You can't see those ones again. You can know A and B again, and except I want to take it back to these. Now, this is A, and it's a far cry. This is B, which you have to, so in the immediate, this is C. But in that immediate, there is immediate, and that is what is in blue. So let me go back there. That is what is in blue that we want to see. Once we cross this, line, mark you never can say that, oh, we are at the end and we are reversing until you see a sign of reversing. You will still treat every trade as if, okay, this is a bearish move because it's a bearish trend. Regardless of what we have mapped out and call this one as a C to end the whole wave, we still have to see what will happen around this pivotal area. It's very, very important for us to know that. So with this, it may seem as if 5-3 is done and we are correcting. Are we done with 5-4? Because 5-4 will still be within this trend line, because it's, I mean, I said, no, sorry about that. Let me check it again. The 4 of this with 3 will be under this trend line. Now, once you want to do a bigger correction of the entire run that will finish it to now run 5, it means that it's either it touches here or it breaks above it. And assuming, let me bring something out. Assuming that for now, this is the lowest low that we can see. So assuming that's the lowest low that we can see, what are we saying? What we are saying is that for us to at least finish wave 4 of this entire run, we know where it's going to be. So we're going to connect, we'll take our fib retracement tool, we'll start from 2, which is here. 2 is actually from this gold here. Look, we'll take it down to that end of 5-3 that we call end of 5-3, and we know where it's going to store, which means that it must not break. So far, it does not break 1.0843. We are still bearish. That is what I'm trying to tell you. We are still bearish, which means that this wave can correct 4 up to this area, which is 38.2 that is expected, or it can be a shallow correction of 4 up to that level. Up to that level. But if we expect that we are done with 3 completely and the internal structure of 4 completely, internal structure of 3 of 4 of these 3 is done, and that we are doing a big 4, each wave has its own 4th wave, the second and the 4th wave. Likewise, these 3 also will have a 2 of 3, because this is a big 2. Now it will have a 2 of 3, and this might look like a 2 of 3, and this might look like a 4 of 3. Do you understand me? This might look like a 4 of 3, and that we are done with 5 of 3. And after 5 of 3, we are going to correct big 4. So we will expect that this big 4 at least will push. If it's going to be big 4 of a truth, it should push towards at least this level, minimum. It should push towards that level, minimum, before we go bearish again. So if we're not going to go bearish again, now we're not telling us that we're now finishing the final leg of that wave to the downside. So that is how to peruse, that's how to think about the structure that is unfolding. But we're still going to see more on the internal structure of this. So even if it touches this, it's still part of that, okay, we are still correcting this new wave, that its own, whatever it's here, its own trend line is C here. So I don't see us breaking here for now. So even if this one is broken to the outside here, it does not mean that the trend has changed. That is what I'm saying. You have to break this to the upside before you begin to say, oh, something has changed here. So this one is a tough call. This is the immediate one. The fact that you have a breach of here, it might just be a false breakout of it, just to finish this wave. And so your knowledge of wave is what will now tell you that though you just have a breach just to complete the 4th wave of this one, then to now have the final leg of 5 run down, which is also going to run in a 5 sequence to the downside. Because this one has done what I think is a 5 sequence. The 3 wave has done a 5 sequence for me. And the 1st wave also did a 5 sequence. If you look at it, this is the 1, and this is the 2 of 1 here, and the 3 of it, the 4, and the truncate the 5th here. So of this one particular one, and this also did a correction to the upside. And this also, which is the 3rd one of it, has done like a 5 wave for me structure so far. You can say this is like a 1 and a 2 and a 3, a 4, and this is like a 5. So if you are done with a 5, and this 5, of course, looks like an ending diagonal for this particular wave, to now give rise to a 4. So we're going to see how far this one is going to go to finish what we call a wave 4. And if we are going to break, if you touch this, is 0.38.2, which is correct for the entire run of wave 4, but we must not reach 1.02843. Now, let's now switch to this part, which is interesting, to this part. if we're not going to see the immediate thing that is happening here, so which is an ending structure for this particular wave, not the entire wave, looks like this. Looks like this. It will come from here, which looks like an ending structure. It's going to come from that place. These edges must touch. And let me use this for it, for a change, because this is a very critical one for us. So once we reach it, we must know how to draw all of these things. And let me take it down a bit. I think it's okay. We are looking at this internal structure here. So this is what we are looking at here. So we have all these ones touched perfectly. So immediately it's like we are breaking out of ending structure of this particular wave. So the 5-3 may have ended here, which is still allowed. So it looks as if we are breaking out of this ending structure. So we are going to see, but it's kind of going up collectively. And that is one thing we must see. It's kind of going up or up collectively. Now, for the ending structure, this one came down as 1 and a 2, and this one came down as a 3, and this like a 4th, and this one appears to have come down here like a 5th, like a 5. But then, before we can say that, yes, this collective structure is completely done around here, we have to first break above here. We have to break above 1.01226. That's the first thing we have to break above. And if we break above that, of course, we don't expect that we are going to break above 1.02047. And that will be a critical level that we must be expecting a reaction. So most likely this trend, blue trend, will be breached, but it won't get to this point. But we look at this resistance here, and of course we can breach this. Then we look at the price action we will have in this zone. It's very important to know if we are going to close a buy, because we expect that price will be pushing back low. Now, what configuration do we have here itself? I've used these and these. I may want to change this color to something. Let me change it to blue, because it's a blue area, and I'll be using this color for something else. Let me change this to. So for the blue area. Good. So this appears to be, you don't take an action here for now. You don't take any action here for now. So let's enlarge this again. We are going inside of this structure to know what the direction of the trade is going to tell us with what we know about trend as well as wave. So I want you to pay attention to the kind of correction that has occurred here. Let's pay attention to it. Now, this is where, okay, this is where I said 38. Yeah, so let me let me change that also. I want to use it somewhere. So this is 38.2. Let me change that also to a deep blue. Now, but for corrections that occurred here, so let's see this correction that has occurred here. If we score this one as 1 before, we are done with this one. But we want to see inside of this correction that has occurred immediately here to know where the trade would likely go. This one here, this one, particular one here, from here to here, down to here to this one. So if we come down here, which is the lower limit of that move, because this is an rather impulsive to that side, which is the lower limit here. So the price touched here in an impulsive manner and started a correction. So we want to look at the correction. What kind of correction that we are seeing? So if we take this one up, we'll take it to the limit that we think price has to break. That's the limit there, up here. So from here, down here, when the correction started to here is, let's say, is A. Is A. This is A because we are correcting. That is A, we are correcting. A. And again, price now came back down to this blue area. We'll call it AB, which is the deep blue. So you can see that it is not easy to just to give an entry, not until you see structure and you see what you are doing. Now that's a B. Now we need to understand the kind of correction that has transpired here between A and B to understand what is going to happen to this wave that is going up. So now if we take our fib retracement tool from the point of A to the beginning of A to the end of A up here, which is the light blue area, then we can see that B stored exactly at 1.414. That is where B stored. So if B should store in that region, this is, we should expect a minimum of what? Extended flat or an expanded flat correction to the upside. And if we now breach the limit of that, then we will now say, okay, something else is happening, which means we can say, oh, maybe it's the beginning of a bigger correction. Now, so let's now see what expand, because it's an expanded flat, 1.414, it's an expanded flat, and the only place is to install is not 100, it is 123. If this one has been a 123 downside to the downside, we can now expect a running flat, which at least will give us an 100, not 123, at least an 100. So to now expect a 123 from here, we start from the end of B to the end of A. We now take it back to the origin of A, which is at this level, to know where 123 is. 123 exactly marks 38.6. So it marks a fib for fourth at 38.2 rather, which is at this level. So this is a key level for price. This is a key level for price to break because it coincides exactly, the correction here coincides exactly at 123 with 38.4. So if that happens and that place is not breached and we have a price action to the downside, it now means that we are now going to finish the last wave to the downside before we now begin to say, okay, yes, we are going to rally up. So what we are seeing here is a correction, and the way this one is going, it's also in a corrective manner. It's going to be a 5-wave up because this is like a 3-wave, 1, 2, 3 to the upside, which is a 3-3, is a flat. And also this one came down here like this, and we have a small correction to the upside side, and this one came down. That's another 3-wave. So this one, it's giving me a similitude or something that looks like a 5-wave. So it will be nice if you are selling at 1.00, which is below this level, to exit at 1.0200. And that would be a good level to say we want to hold on to and see a price action to exit. So, and after a price action there, we'll know what we want to do. But for me, and from experience, I think this thing is not ready yet to go up. We are still going to have a leg to the downside. That's what it is looking like. So, and after that leg comes to the downside, because it's going to be the last 5 waves to the downside, it could be truncated, but this will be another level that we have to see a price action if you're going to go to the downside or not. And let me show us something. In case you want to follow this one and to know that it has ended, we'll take a trend line. I want to teach us the secret of not burning our account and blowing it and waiting for a price action before we, even if we know levels, because at times when I give those levels, it doesn't mean that nothing will not change. So it can change structures and like that. So what we are going to do with this now, we are going to put a the best thing you can do is to put an alert on this trend and also an alert on this resistance. 1 hour alert on this particular resistance at 1.02047 and 1 hour alert on these 2 areas, because this confluence is a very strong confluence for price action to take place. So if this one is breached to the upside and we see a price action that is telling us price is going to go for that upside, you know, we already had a price action for, you know, this is a very strong area for a price action. We've had it here before, like a resistance here. Price broke this and tested this area as a resistance, you can see. Then we are expecting that price will come here. We expect a price action here. This is where to actually get down, you know, if you are selling. Also, if you are buying, to wait for what is going to happen. I strongly don't think that this thing is going to go up to this area now. I don't think so, you know. So the highest probability is for price to come up to this point and to go bearish to break this line. And when it's breaking this line, you just wait for it. It is not good for you to sell it because the structure is already ending. And so it's not good for you to spend. So the structure will be doing the 5th wave. If it is the 3rd and the 4th has ended, if it's going to end the 4th here, then it's going to do the 5th wave. And that is what we are going to wait to buy. So for me, we still have a 1 leg that is coming down. And I need to see that leg come down first before we ride it up. So if it's going to come down first, if it's going to go, let's let it go on. We don't have to close anything, but you can just set whatever here. Your price, your TP at, don't make it exactly 1.02047. You can make it exactly 1.0200 or 2000 or 200 or whatever. So that you for brokers to take their own, and that will still be a good thing for you at that level. You will at least have about 200 pips to yourself. About 200 pips to yourself from the level that you have. Some people will have like about 200 pips to themselves. It's better for you to, you know, get out from there. And we will now follow, once we have a price action to the downside, we'll now follow whatever is going to happen. See, at areas like this, I want to show you something. I want to show you something in this area. if anybody had wanted to pick what is going to happen here, if the price had been coming down and you expect that, will this price break up or break to the downside? Now, this is the first thing that we are seeing, and we want to know if price is going to break to the upside or downside. The best thing for anybody to do is to have drawn these here. When you draw this, I'm just telling us critical areas, what we can do and how we can wait patiently for anything before we engage price. So this one probably could have also formed the upper trend. So we will expect either price is going to break above the golden yellow or price is going to break below here. But because this one had formed here, this doji is a price action and which is a reaction. Yes, the first thing that you have to see is a reaction, but you have to wait for confirmation. And the confirmation is that you have to see a momentum candle close below this, and you now enter. So when you do this, I'm just telling us for us to know what we're going to do when this one is coming to the downside, because this will be a target area that we will expect that, can I put a buy order here and watch for what is going to happen? Because you don't want to just preempt that this is what price is going to do. That would be too much of a guess. We do that a whole lot of times because we want to catch moves. But these people can extend, and from what I can see here, we might still go and push to the downside. Either we equal this area here, or we breach it a bit to touch here before price eventually made it back up. In that case, when we say the fifth wave of it will be truncated, or it can push more. So, but we're going to follow this wave that is coming down to see how it's also, forming, to know where it's going to terminate and where we can look for long opportunities. So now for here, let me just focus here again. So if you go on 1 hour, when you look at it on the lower time frame, on the higher time frame, which is 4 hours, then you look at it now. So once we have this break, this broke, it didn't break up, which means it's not the end. It didn't break up, but it broke down. If it broke down by this week, it's not enough, and it's sending signal that's closed. You don't want to sell anything. I'm just telling us, I'm giving us a tip of knowing how to actually get a right entry to say, okay, I've double confirmed that the structure has broken to the side that I want, but I need to know that it's not a false breakout. So after this one had happened, so you can see this tail is not confirming anything. The next one I can do is not confirming anything. This also is not confirming anything. I need to see a momentum candle. So this is more or less like a momentum candle for me. So if I had wanted to come in, this would have been the candle for me to judge, to say, oh, I want to enter. With this candle closing completely below the trend line, I will just look for the immediate resistance here, which is this candle here, and I will look for my entry around this level. See, if you have picked your entry around this level, probably after 4 hours or 8 hours, the price will still draw you in here or here before making a further break to the downside. That is how to use this to confirm. You have to have a structured break to the downside, then you switch to 1 hour to see if the momentum candle at close. If you're going to use 4 hour momentum candle, then you won't meet a whole lot of pips would have just gone below. For instance, let's see. If you're going to use a 4 hour candle to plot your entry, moves would have gone, because this looks like immediate, because this is like this one closed and you add this one closed completely. So if you're still going to, this one is even still good because it's a corrective wave. If it's like an impulsive wave, the thing would have gone, just like you add it here. Let me use this area to teach you. This area, yes. This particular area to teach you what I'm trying to say. To find an entry, perfect entry. I believe what I'm doing this morning is going to help you. These are areas of confluence, and we draw a structure because we saw this one as a reaction for a pullback or whatever, and we draw it. We can draw it this way because that is the way it's going up. You can draw it this way. Even if you want to draw it this way, let's say you want to draw it this way. So I would have preferred to draw it the other way around. So let's say we want to draw it this way, because if anything, we're still seeing like reactions here, reactions here. So I would have preferred to draw it this way, but we can still draw it this way after seeing this small action, and we are waiting for a break. We can still draw it this way because this is the first up and the first low. Then you have to pick the first up and the first low to be able to draw a trend line. So which is still good. If you drop this one, if you draw it this way, it might not be so good for you. If you have drawn it this way, it won't catch anything. So it might be a false thing for you, except that the trend is long enough. So I think this one is still good. But you can see that this one might not even give you opportunity. This is a momentum candle because you don't know it's going to come. Now, the other one, it's like, okay, is it going to break up? And to the upside, you want to draw this also to capture this too. To capture this too. So now, this is where we have like a contracting triangle, a contracting triangle. This is where we have. So we don't know where the structure is going to break to. Of course, something tells us, oh, you want to go in line of the trend of the major trend. But since if it's going to be a bigger correction and it's going to break above, since this one is not violated, price will still go up here because it's not violated. And that is a huge peak from here. If price had gone up to this area, that is about 100 pips, which will wipe your stop loss. So, but we want to prevent a false breakout. We have drawn this one, and we want to now see. Once we had this break, this might not give you an opportunity to enter because you are waiting for what? You are waiting for like a 4-hour candle to close, and price will never probably come back there to retest. So you'll miss it. So all you can do is to shift to 1 hour and see what you can get on 1 hour after the break of that structure there. So after the break of that structure there, see, this is what you see, a momentum candle. This is a confirmation. When you see a momentum candle closed and it closed completely, not with a wick, it closed completely like this, is a momentum candle. You know that you can only pick a continuation from here. So picking a continuation from here, you are going to look at where this thing had closed. If it has closed here, it's either you pick, when this one is forming here, you come here to pick your entry, or you come to the low here, which is where the price has tested here, to pick your entry. This low or this place will be good because this is a momentum candle that's closed. And if you look upwards, outside here, price didn't engage the upside. It did what? It came back down. It didn't go up. It didn't break above. So this is how to actually use when you are having a correction at the key levels and you have reactions, because those are the actions that we saw, and that's how to guide it. You wait immediately for a momentum candle to form and close below it, then you follow it. That's how to catch it. But on 1 hour, because this thing actually took about 72 pips. 72 pips. So for me, I would have probably want to pick this, and in case I'm going to lose out from here, I will just watch the next resistance here. And if I had done this, and this will be the best place because price will not come here. Price will not come up here. If there's a break, this is the structure that you can say you want to follow. Price will not come to that place because the momentum candle. So, and this is the place that I would have just managed at the low of here, because I will know price will still want to come to where it closed here at least before going further down. So in that case, I will still gain an entry. I will still gain entry around here. I would have lost a decent move and probably put my stop loss above this level here. And when you do that, of course, you still have at the back of your mind the knowledge of wave analysis. Let's now go back there to see that, okay, we have gained an entry immediately here before the 4-hour candle closes. At 1 hour, we gain an entry here, and we have gained something here, and the price will continue to move down. So if you are waiting here, then a whole lot has happened. So you still have gained to this level before it closed. Yeah, about 55 pips, in your favor, and price will go more down. That's how to do it. So I'm just teaching us what to do when we are. So I've analyzed this structure here that, to me, what is unfolding is an expanded flat. That is what is unfolding at this level. So we are going to see that most likely we expect price to still come bearish. Price may come a bit down. Immediately at the opening of the market, may come a bit down to form a new low. And sorry, not a new low. It might not go. I don't expect price to push below here. Probably price may come down a bit, or may even just continue to go up. So, but I don't expect price to break this low for now. Price will just go up, probably touch here and come down once more. And we're not going to trade that. Wait for price to make its move for us to go up. And that's what we're going to do. That is a lesson. And area we expect that price will react. Price may react here because this is a resistance here. It was a support and it became a resistance here. Price may react here, but I don't think that with the strength of the correction that the price will stall around this area. Even if price is going to do an 100 for an extended flat, it's going to be above it. Let's see. So that is what wave analysis will edge that is going to give you. So if you come back here, an 100 extension is even above it here. So price cannot do this. It won't work. Price cannot do this up here. Price may come, but this price looks, because there's no zone for it for price to test. So it's actually at 38 that price can test. So I don't see that price is going to back down on this strength, on the strength of this support or, or resistance here or support here. It's not going to back down. I don't think so. So, but we'll wait and see. And that is how wave analysis with your support and resistance can help you to know that this area price may likely break it based on the strength of this structure that is unfolding. And this is where most likely, and you put, your alert here, in case it didn't touch and it wants to break and you can close manually, but not immediately. But market would have to break this structure before you think that you want to close manually. If it crosses this trend line without breaking this structure, just leave whatever you have, still leave your trade. So once it makes a new high, then you can now withdraw your trend line. I'm just teaching us. And when price is coming down, so we're going to draw a trend line to guide price and see how it's going to break and to look for the momentum, if anybody had wanted also to trade this one here, based on what I taught us here, to say, okay, will the price be going more downwards, or the price is going to be going for upwards to correct? It's still the same thing that we must know. Your wave analysis first, you enter, you come up here, because this is the trend that we can see here. This is the trend you can see here. Price made a high here and a new high here. So it's enough for me to draw this. Then I can also create, because price had created a wedge here for me, so I can just come here, then take this one to this side, because that's an ending wedge for this particular wave. So price have created that one for me. So I'm looking at what is the price going to do in this corner. Would it break below here or would it break above here? All I needed to see will still be a momentum candle. And if I take it up to 1 hour time frame after the break of that. So 1 hour time frame, we had a break out of here and we had a closure of this candle, not particularly a momentum candle. If you want to trade this kind of a trade, because it's corrective, you're going to use a tight stop loss. Probably you put your stop loss below this low, because once the break this low again, it's going to go down. So if price wants to make an ascent, at least this immediate low, you don't expect price to break it because it broke outside of this correction. So and if this one closed immediately outside here, so you're going to look for where it broke. Probably I would have entered up here where this candle broke, or around this area to look for immediate resistance, or around this area, this particular area. I will still be drawn in on whatever, and price will still be continuing, will still push higher up. So that is what I want us to be seeing. So now, after this analysis done here, I want to give you a giveaway of what I think price is doing and what it's going to do. So we know that this is what we expect in the immediate terms, and the price should not push above here. So if price should push above here and we see a price action, it means that we are going further upside. But for now, we have corrected this, and this is a correction in the middle, an expanded flat, and we want to see this expanded flat finish its course around this area. And if that happens, is the fourth wave of 5, and we're going to do a fifth wave, and we're going to see if it's going to be truncated here or push a little bit lower to the downside. So all in all, the push for the upside move that we are expecting is still not yet ready. That's what I'm saying. It's still not yet ready. Don't anticipate that. It's still not yet ready. This is still we're in a corrective mode, and it may be ready by the end of this week or by the end of this month that we're going to push higher up. And if we're going to push higher up, then we'll now see the way the price is going to go up. If it's going to be in a corrective way or it's going to be in an impulsive way. If it goes up in an impulsive way, then you know that the trend most likely has changed. If it goes up in a collective way, you know that we are it's going to be a deep and a big correction, and that big correction can take between 500 to 1,000 pips. If that is what the price is going to give us. So we wait. We can't preempt. You can't judge. You are not the one in control of the market, but the big boys. Now, with what I've shown you here, let me show you a bit of what is happening inside pounds USD. Inside pounds USD. Inside pounds USD. Now, looking into pound USD, it's still similar to. It's similar. It's similar. We are going to look at the correction that we have seen here. Now, this is A and this is B, and we say this is C that is going up. That's pounds USD. Where is it going to get to? We say this is A, B. When you watch this video over and over, there's no way you will not understand what it's all about in wave analysis and correction and all of that. So, and if the if the fib ratio is not aligning, then what you are seeing, you're not seeing well. So that means what your analysis is telling you is wrong. So, but if it's falling in place, then most likely it's going to be like that. Now, looking at a fib correction of this, from this the beginning of A to the end of A, which is here, to the downside, this is about 123. So because it's 123, which we expect that it may give us at least a running flat. this is not going to give us an extended flat. We should be expecting a running flat, a 61 or an 100. So if that is the case, a 61 and 100, we'll start from here to note the limit of that to the end of A, coming back to the beginning of A, and 100 is going to fall exactly here. A 61 is below here. Of course, it can be a 61 if it reacts at this black level, black line level to the downside. That would be a 61, but we expect at least a 100. A 123 is up here, which is what I don't expect the price to break, and that would have broken this trend line anyway. For the 123, a 100 is still possible. So I will expect that the price may just fall back around this level here at 1.2 thousand. So that is what we expect based on that. Now, let me now give you a giveaway to all these things that is happening, because it's pretty much the same. What we are seeing here is pretty much the same on pound card. Pound card. Pound card is a bit ahead. Pound card is a bit ahead. So pound card is a bit ahead. Also, is a corrective mode. Let it load. I'll soon be finishing. Good. Pound card is a bit ahead. So if you look at it in pound card, so we have this A move here. You know, between here and here is A. Then we have B come down and a C this side. So what do we have there in terms of a free retracement for pound card? From here, from beginning of A to the end of A, where we have this blue line, is also 123. So if it's 123, which we expect, and a running flat is 61 or an 100. So taking that into consideration, from here to the end of A, back to the origin of A, gave us exactly 100. So we saw a reaction at the 100 and price is coming back down. So price is coming back down. If you want to catch this might just be your 5-3 that has ended and a 5-4, then we are finishing a 5 wave down. Sorry, please. Sorry. So that's so, and once this one is not broken to the upside, then we'll be having the fifth wave coming to the downside, and this is what we'll be guiding. We'll be guiding this structure to know when exactly this thing is going to break to the upside. So we need to use this. I'm on this trade. I'm on this trade. I'm on this trade. I'm already finding another level that I'm going to buy. Okay. Then I will show you something here. So from here, the reaction here up to this level is actually 61.8 pip retracement, which tells me that from here down to this level is 5-1. I mean, one of 5, the last 5, yeah. So one of it, because it's going to run 5 waves down. So, and this is exactly 61. You can see this is 61.8 here. So we're going to see this one also come down. So what is the limit to where we expect this thing to go? And this is how to do it. This is how to do it. If you are looking for your, so it's because it's the 4th wave and the last wave that's going to give up the 5th wave. So we expect that it's going to run at least 123 to 161. So from here up to this level, That is what we expect. This is 123 here, and this is 161 here. And below it, we can say, okay, we're going to put our stop loss. So that's why I put a 5.5 here. So that is where we should expect this thing to get to. Most likely around here or here. If it's going to be truncated, then you will see that it's going to be truncated by the time we have a breakout of this structure. And usually, you don't want to say, okay, it's going to be here. Probably you can pick the last line of defense here. If it's going to break and stall around this area, price is going to break and give us a momentum. 1 hour momentum, you enter to save with the price to the upside. Now, this has given us a reaction to the downside already. It has completed its correction and is going now for the last leg of correction to finish 5. Now, if you look at Euro USD, and in case it works out like that, we're going to see that in a few days that the price may just hit this area and turn to the downside. If it reacted or it reacts around this area. So where do we think price may get to? Where do we think price may get to? So we take it also like here, from this reaction in blue, from this level of 5.3 in blue to the proposed 5.4, and we should expect price to do a 123 or 161, which is around this level. So price may still make it down to around 0.98 200 level before we now begin to push up. So that's what I'm trying to tell you. So if you are currently holding position, you may want to get out here. Then if you see a momentum candle break out of this structure here, why not? We can now do another entry. So we would have saved safeguarded and pockets money before we lose everything. So now the last one, I'll just touch briefly on yen. That will be the last one I'll touch on here. So, and I want to tell you that yen is not good for a buy for now. Yen is not good for a buy for now, and it's not good for itself for now because of what is happening. You don't want to continue to buy this. So, because what this one is giving me a corrective structure to the downside for a break to the upside. And yen is not where you want to be forecasting. Let me join it here. It's giving me, see, there's no price action for downside here. I can't see it yet. There's no price action for. So this wedge now or a triangle, and just need to see price break to either upside or downside. And for me, if it breaks to the upside, I might just take a short trade to the upside, and that's what I might just do. Take a short trade to the upside and follow it until it terminates and I get out of it. So that's what I might want to do. And if it breaks to the downside, maybe I just want to still continue to allow it go. So I want to set an alert here, what for momentum can do. But this is not, it's not yet good. It's not yet ready for downside already. It's not yet ready for downside. But again, you don't want to buy it. So you want to be very careful buying it. You know, the Bank of Japan, they are doing nothing at the moment. They are just allowing, a fall. And, dollar also is getting weak. But yen, I think, is being manipulated at this moment. So you want to wait for actions or a very good reaction before you say you want to buy yen. So yen would have to break this trend line first and missing a reaction around this area before you say I want to buy it. So, but this is a level. If you are buying it, if you are selling it yet, this is a level you want to see reaction. If price could, find its way to this level, because this is what is a resistance here, and a resistance here, where I will expect price to use this as a support before going further up. So let's see if this momentum can just drag price to this side. I want to see a reaction of price here to decide if it's going to go further up to the upside or it's going to break low. That is what you can do. So if you're already selling, it's better for you to find your exit around 137,750. 137,750. Find your exit, get out of that, and wait for what price action you will get here, either to the upside or to the downside before you engage it. But really, down is what we want to go, but it's not ready to come down yet. And that marks the end of mine. Watch this video over and over. Please subscribe, you can share with people. The more subscription I have, the more it's good for me. Thank you.